Good day, friends. Today we will discuss important case laws as far as syllabus of IBBI is concerned. In the IBBI examination, you will get certain question out of these important case laws. So this is an important topic. So as far as syllabus of this topic is concerned, you have to learn following case laws. First one is R.C. Cooper versus Union of India 1970 AISR SC 564. Second case law is Sorab D. Talati versus Joseph Michem as per appeal number 101 of 1949 NARA application number 805 of 1948. Then CWT versus PN Sikand 1977 107 ITR 922 Supreme Court. Then Wenger and Company versus DVO 1978 105 15 ITR 648 Delhi High Court. Then next one is Jawajee Nagnathan versus Revenue Divisional Officer 1994 SCC 4 595 SC. Then Chimanlal Hargovind Das versus SLAO Pune AIR 1988 Supreme Court 16 1652. Then CED versus Radhadevi Jalan 1968 67 ITR 761 Calcutta. Then CIT versus Ashima Sinha 1979 116 ITR 26 Calcutta. Then CIT versus Anupam Kumar and others 1980 125 ITR 684 Calcutta. Then CIT versus Srimati Vimlaben Patel 1979 118 ITR 134 Gujarat. So weightage is 2% means you will get 2 marks questions out of this syllabus. So we will discuss these case laws one by one. First case is R.C. Cooper versus Union of India 1970 AIR SC 564. So this case law is very important case law. It's gives in this case class Supreme Court has explained the word property. As far as this law is concerned, it's explained highest right a man can have to anything, being that right which one has to lands or tenements, goods or chattels which does not depend upon another's courtesy. That is the word property. So property means the highest right a man can have to anything. Then it includes ownership, estates, and interest in corporeal things, and also rights such as trademarks, copyrights, patents, and even rights in personam capable of transfer of or transmission such as debts and signifies a beneficial right to or a thing considered as having money value, especially with the reference to transfer or succession and to their capacity of being injured. Thus, the court has included all type of property which is tangible. So, one most important thing about this case law is that bank nationalization in view of socialism and priority allocation of the resources. So it was a landmark judgment of 11 judges bank, and its constitutional validity of bank nationalization by Indira Gandhi government was challenged on the basis of this case laws, and nationalization to be invalid SC by a majority of 10 is to 1 observed that nationalization of banks impaired the right of compensation under Article 31(2) of the Constitution of India, and consequently was struck down primarily on the ground of violation of Article 31(2). Aftermath Thereafter, the Banking Companies Acquisition and Transfer of Undertaking Act 1970 was enacted by the Parliament, but with the inclusion of specific amount of compensation to be paid to each of the 14 banks. So this case laws after this case law after this case, then the government enacted Acquisition and Transfer of Undertaking Act 1970, under which the nationalization of banks was done with with inclusion of a specific amount of compensation to be paid to each of the 14 banks which were nationalized by Indira Gandhi government during those days. So this is an important case law. Second case law is Sorab D. Talati versus Joseph Michem. So in 1949, Small Court Cause Court of Bombay for the first time laid down the principle of rent fixation, means standard rent in the case of Saurabh Talati. So this is the case where standard rent, how the standard rent was to be calculated was given, and certain principles were laid down by the court. So in this case, court approved the investment theory in preference to the comparable rent theory to fix standard rent of the rent collected rent controlled premises. The court considered return or yield from gilt yield securities as the basis for determining the fair rent to the landlord or on his investment in land and buildings. For land, 1.5% more return, that is more than average yield on the long-term government security, was approved as far as return, as fair return. And for buildings, 2.5% more returns than the average yield on long-term government security was approved as fair rent on investment in buildings. For leasehold property, fair to account for extra risk of investing capital in leasehold property, 1% extra yield on both type of investment was considered. So, according to this act, the government security rate was formed the basis, and then for the land where this rate has to be increased by 1.4% for the land part, and for building 2.4% is to be added in that rate. And for leasehold property, 1% extra yield is for both land and for building was considered, which is based upon the base rate of government long-term government securities. So this is as per case law of Saurabh D. Talati versus Joseph Michem. Next case law is CVT versus P and Sikand. This holds the leasehold interest in the on the condition that if he assign it, 50% of the unearned increase in the value of the land will be payable to the lessor. So if the land or property is assigned, then 50% of unearned increase in the value of the land will be payable to the lessor according to this case law. So court held that an assessee determining the value of leasehold interest of the assessee in the land for the purpose of assessment to the wealth tax, the price which the leasehold interest would fetch in the open market would have to be reduced by 50% of the unearned increase in the value of the land on the as is of hypothetical sale of the on the valuation date. So, as far as valuation by the assessee for wealth tax, the by as given by the approved valuer, it was 5,82,268, out of which 1,30,000 was deducted as 50% of the unearned increase. So the value it of 4,52,268 was accepted by the court. So, but as far as value by wealth tax officer is concerned, he has assumed the gross annual rent as 1,32,000 and a net annual rent as 82,956. And by considering YP equals to 10, the wealth tax officer has calculated the value as 8,29,060 and reduced it to 66 lakh since the figure was accepted by WTO wealth tax officer last year. But as they does not consider this unearned increase, 50% unearned increased, but court said this has to be considered. So as far as this case law is concerned, so this is important thing. 50% of unearned increase in the value of the land will be payable to the lessor. This is an important thing to be remembered in case of CWT versus P and SCUM. Then next one is Wenger and Company versus DBU. So what this court case law says, district valuation officer accepted the two methods of value of the property. For the owner occupied portion, he calculated the value on the basis of sale of commercial flat, that the rate he adopted was the rate prevalent for the sale of commercial flat, and for the tenanted portion he capitalized the rental value. So this method adopted by district VO for his approach is not only accepted but also in accordance with the principle of valuation. So for as far as honor occupied portion, you may take any method, but for the tenanted portion you have to use rent control capitalization method. This is as per Ranger and Company versus TB. Next is Jawajee Nagnathan versus Revenue Divisional Officer. So this is a case of land acquisition, and in this case, the court held it is therefore clear that the basic valuation registered, prepared, and maintained for the purpose of collecting stamp duty has no statutory base or force. It cannot form a foundation to determine the market value mentioned thereunder in instrument brought for registration. Evidence of bona fide sales between willing prudent vendor and the prudent vendee of the land acquired are situated about that land possessing the same or similar advantageous feature would furnish the basis to determine the market value. So according to this case law, court held that guideline value cannot be used for in case of land acquisition. It is only for collecting the stamp duty. For that, then you have to take the for bona fide sales between willing prudent vendor and prudent vendee of the land acquired are situated near the land which is to be possessed or acquired by the any government authority, which the and the land which is having similar advantages features, they have to be considered. Next one is Chimanlal Hargovind versus SLAO Pune. According to this, the following factor must be taken into account while doing the valuation. Instances to be taken into account: if they are very proximate, genuine, the acquisition itself has not motivated the purchase to pay higher price on account of resultant improvement in the development prospects and locations. So these four things have to be considered for doing valuation for land acquisition according to this law. And other things which have to be considered, that smallness of the size will be considered as positive factor, and largeness of the area will be considered as negative factor. Proximity to the road will be considered as a positive factor. Frontage on a road level vis-a-vis land under acquisition, regular shape, nearness to the developed area, special value for an owner of an adjoining property to whom it may have some very special advantage. These are considered as positive factors, and some negative factors such as largeness of the area situated in the interior at a distance from the road, narrow strip of land with very small frontage compared to the depth, lower level requiring the depressed portion to be filled up, irregular shape, remoteness from the developed locality, some special disadvantage factors which would deter a purchaser. So these things have to be considered. Then the evaluation of these factors, of course, depends upon the fact of each case. There cannot be any hard and fast or rigid rule. Common sense is the best and most reliable guide, according to this Chamanlal Hargovind versus SLAO. Mm, So, for instances, take the factors regarding size. Firstly, while a smaller plot is within the reach of many and a large block of land will have to be developed by preparing a layout, carving out road, leaving open spaces, plotting out smaller plots, waiting for purchasers. Meanwhile, the invested money will be blocked up, and the hazards of an entrepreneur. This has to be considered. Then the factor can be discounted by making the deduction by way of an allowance at an appropriate rate ranging approximately between 20 to 50% to account for the land required to be set up apart from carving out lands and plotting out small plots. The discounting will to some extent also depend on whether it is a rural area or urban area, whether building activity is picking up, and whether waiting period during which the capital of the entrepreneur would be looked up will be longer or shorter, and the attendant hazards. Every case must be dealt with its own facts pattern, bearing in mind all these factors as prudent purchaser of land in which position judge must place himself. So these are general guidelines to be applied with understanding, informed with common sense. The next case is CED versus Radhadevi Jalan. So this is particularly for rent properties. It also says rented property must be valued by rent capitalization method. And in case of buildings which are in possession of tenant and tenants cannot either be evicted or the rent payable by them cannot be enhanced except in accordance with the provisions of the Rent Act, the only appropriate method of valuation is to capitalize the annual rent by certain number of years purchase. So this method of valuing land and building separately and adding up the value would improper in such cases because that would ignore the impact of Rent Control Act of the value of the land and building. So this case law especially dealt with the properties under rent which are under Rent Control Act, and these properties has to be valued by rent capitalization method, what it says. And next case law is CIT versus Anupkumar Kapoor and others. So the valuation officer under the method adopted by him has taken the value of the land twice. Figure once in arriving the figures by yield or rental method and again by applying the reversionary method. So this is our view was wholly wrong. So in this case the Calcutta court rejected concept of a reversionary value of land. The above case was fully tenanted property and obviously therefore the land reversion was not possible and hence its value cannot be added. So especially in case of rent controlled property where you are using YP perpetual rate. So what it says that you cannot use reversion of the land because where the land reversion of land is not possible in case of fully tenanted property. So the court has rejected the addition of land reversion value in the valuation. So this is as per according case law CIT versus Anupam Kapoor and others. Next one is CIT versus Srimati Bibla Devi Bhagwan Das Patel. The rate of capitalization should not be unreal and must have due regards for commercial rate of returns after taking into consideration of the various constraints and insecurity in the property market. So after considering payment provisions of this act, the court opined, in our opinion, a reasonable and appropriate rate of capitalization rate would be 8.33 times the net average annual income, which would give yield of 12% annum on the investment of capital investors. So this case rate of capitalization for certain considerations were given for rate of capitalization, how it should be decided. So generally they have given 12% rate of return or YP that will be equals to 100 upon 12 which is 8.30. So this is the keywords which you should remember because in the questions whenever it is somewhere it is written system C Cooper, then it should come to your mind that it gives nationalization of banks, definition of property, tangible and intangible assets, and it is 25th amendments to the constitution. For Wenger and Company versus DVO, this gives for owner occupied portion by sales comparison method, and this cost loss stated and tenanted portion by rent capitalization method. So combination of method was the key word for Wenger and Company. So many times you will get questions either these types of details will be given, you have to give the name of the case law or name of the case law will be given and you have to give the statement which statement is correct as far this case law is concerned. So for Sorab Talati versus Joseph Michem appeal, it gives wherever guilt as security is written, it means it is Talati versus Joseph Michem as the basis for determining the fair return to the landlord on his investment in land and building. CWT versus PN Sikand. Assess hold Assessee holds the leasehold interest on the condition that if he assigned it, 50% of the unearned increase in the value of the land will be payable to the lessor. So, if, wherever this type of statement is given, it means it is from CWT versus P and Scan. Then Jawajee Nagnathan versus Revenue Divisional Officer. Basic valuation register prepared and maintained for the collecting is only for collecting stamp duty and has no statutory value or statutory base for force. So evidence of bona fide sales between willing prudent vendor and the prudent vendee of the land acquired or situated near about the land possessing the same or similar advantageous features would furnish the basis to determine the market value. So it gives how the market value is to be determined. So basic valuation register or collectorate rate cannot be used for calculating the value of the property. Then Chimanlal Hargovind in this case law, code derives the plus and minus factors to be considered in land acquisition valuation. Comparison of instance plays a major role in deriving at value. CED versus Radhadevi Jalan. Properties that comes under the PV of Rent Control Act shall be valued by rent control method only, and increment in rent shall be considered in accordance with the provisions of Rent Control Act. CIT versus Ashima Sinha. In this case, Honorable Court, High Court has held that in the method adopted by valuation officer, the value of the land is taken twice, with the amount included in the yield method, again under reversionary method. This is a novel approach, but in our views, it is erroneous. Then CEVIT versus Anupkumar Kapoor and others. In this case, fully attended property reversionary value of the land does not exist as the nature of tenancies of perpetual nature. Then CIT versus Srimati Vimlaben Patel. It gives how the rate of capitalization is to be decided. So rate of capitalization must have due regards to the commercial rate of return after taking into consideration the various constraints and insecurities in the property market. Accepted YP as 8.33 and rate of interest at 12% in this case. So this is all as far as case law is concerned. So you will get at least 2 marks questions out of this. So there are two types of question: either the case law is given and you have to choose which statement is correct. As far as this case law is concerned, a statement will be given to you and you have to choose from this from you have to give the name of the case law. So this is very easy question and you can easily score 2 marks out of this, which are very important for passing the examination. So if you like, so please like, share and subscribe our YouTube channel www.youtube.com at values club 07 for more such educational video on valuation and other related videos. Of course, all these videos are free of cost. And if you have any suggestion, please comment. Your suggestions are always welcome. Thank you. Have a nice day.